The used car market is seriously collapsing, crumbling, the bubble's bursting. It's not even hyperbolic at this point, Dad. It's just the reality of the situation. We're going to run through the latest data and the indicators that are putting even more pressure on the used car market, driving prices down even lower. How's that sound?
What's that game you play with blocks and you try and pull? Is that Zynga or something? Was it you know, with the, and you pull the block out and you hope the whole thing doesn't fall down?
Tetris?
No, it's with the wooden blocks.
Jenga,
that's it. Yeah. Yeah, you almost make the used car market sound like Jenga. It's not that bad.
It's pretty bad, though. Week over week, the latest data from our friends over at Black Book, Dad, another 1% decline, wholesale side of the used car market. To be very clear, it is happening on the retail side just as well. But run us through another week, what we see.
Another week of major declines in the wholesale values of the used cars that dealers are paying at the wholesale auctions. It started 8 or 10 weeks ago, maybe 11 weeks ago at this point, where we started to see declines week over week of close to a point. Of 1 percentage point of value week over week. Last week, it was what, almost a point and a half, 1.47%
for cars.
For cars. For the entire market, it was 1.19%. This week, the car segment's off 1.28%. The truck market's off 0.94%, and the overall market's off 1.05%. These are not typical declines.
No.
Typically, you don't see declines of 1% or more week over week over week over week.
Thinking about getting auto insurance? Compare quotes from all the major carriers in one place. Join YAA.com/insurance. It's quick, easy, and no spam.
And can we just touch on for a second, Dad? There's a supply issue and there's a demand issue.
Yes.
The supply issue, to be clear, is actually a good issue in the sense that there is now an oversupply of used cars relative to where we have been.
Yes.
And how can we say that with confidence? We have seen loan delinquencies and repossession rates higher than they've been in the past 10 years. New TransUnion data shows the loan delinquencies at the highest rate they've been in 10 years.
For 60 days.
For 60 days. Okay, so that means there's going to be a bigger supply of used cars on the market. Rental car companies, fleet sales to rental car companies up 58% year over year. That means rental car companies, and the Black Book data talks about this as well, they're not buying used cars at the auctions anymore. So they're becoming sellers again, which is what they're supposed to be. They sell their inventory. They turn it over. So that's increasing supply. And then on the demand side, Dad, consumers are taking themselves out of the market because A, they were fed up with the prices being too high, but more importantly now, interest rates.
Are too high, and so fewer cars are actually affordable, and so there are less people in the market actually looking to buy either a new or pre-owned car. So the pie is shrinking. The demand is, the demand is shrinking. The supply is increasing, and interest rates have continued to go up, so affordability is becoming a real issue, and we're finally seeing that reflected on both the wholesale level and translating into the retail level of pricing.
More data for you that helps corroborate what's happening. Used vehicle retail listings, Dad, up 15% from the beginning of this year. There are 15% more used cars for sale on the retail market right now than there was at the beginning of the year. And of those vehicles that are for sale, a very common theme. Go on, join YAA.com/cars and search for a vehicle. The price history will show you that prices are coming down. There are no vehicles that we've been able to identify or find ad hoc just searching around that are going up in price like they were during the pandemic. They're coming down in price, Dad, especially vehicles like luxury vehicles, Teslas, things like that. Prices are down significantly, 10, 15, 20%. That means they're more negotiable. And that also is being influenced by the fact that the dealer is paying an interest. Floor planning that
higher interest.
Exactly. The interest rate going up doesn't only affect you and me, the people that are going to buy the car retail. the dealership pays a floor plan cost. They don't buy their inventory in cash. So
most dealerships finance all their inventory. There are dealerships out there that do actually pay cash for their used car inventory, but those dealerships are few and far between. So if a dealer's been sitting on a car, it's not getting less expensive for them to hold that car. It's getting more expensive for them. So just from the perspective of being able to negotiate with the dealer, I mean, you can look them in the eye and say, it's going to cost you more to hold on to this car than the amount you're going to have to discount it to get me to buy it. So you might as well just sell it to me, and you have the opportunity to perhaps make some finance money, some back end money out of your finance and insurance department when you run me through there to complete my paperwork.
And you, before you bought that car, got your extended warranty quote from YAA and know not to pay more than what we've quoted you. And you've gotten your pre-approval from a credit union that YAA connected you to. So you know if you're getting a fair interest rate. So you're not actually going to get taken advantage of, but it is the right way to approach that conversation.
Yes.
And let's touch on one other thing here, Dad, which is the impact to us, the consumer. If you're going to sell your car, and I'm wearing my CarWiser hoodie today. Shout out to the CarWiser team. We partner with them. Join YAA.com/sell. If you're going to sell your car today, do it yesterday.
Yes.
Because the value of that car you're going to sell is plummeting in the same direction that the retail inventory, used retail, it's worth more yesterday than it was today, and it'll be worth more today than it will be tomorrow.
Exactly.
So factor that into your decision making as well. Used cars will be negotiable throughout the beginning of next year. I mean, maybe there will be a springtime increase in used car prices, but probably not, to be honest, if interest rates continue to go up. So you have a buyer's market, you have leverage, but the vehicle you're selling is also worth less.
You as a consumer have more leverage today than you have had in the past 18 months. Now, having said that, that doesn't mean that the values of the cars is anywhere near what they had been 2 years ago. They're not. But the values of the cars are coming down, which means they're moving in the right direction for a change. Will they ever get back to the levels that we saw prior to the COVID pandemic? Probably not. But there are deals to be had. There are negotiations to be talked about. There are savings that you can find at most dealerships today. And if you're at a dealership where they won't work with you, go to a dealership that will work with you.
Let us know what questions you have about what's going on in the market in the comments down below. And if you haven't already, check the success stories. It's free. Success story. The whole community forum is free, but the success stories just are people literally buying cars every day. They either work with our team or they might not even be YAA Plus members. They might just come along and share a success story. Cars are negotiable, folks. Go enjoy the fact that they are. Don't get screwed on all the other pieces. Still be savvy there. It's a totally different market today than it was last week, and it'll continue to get better over the coming days and months.
Absolutely.
Thank you, Pops.
Thank you, Handsome.